Hello, everybody. Kirk Spano, Investing 2020s and elsewhere on the interwebs. I am going to do a review today because we have several new subscribers, actually several dozen over the last month or so. And I want to just give the outline of where we're at, what I've been saying for a number of years regarding how the economy works and whether or not the Fed is our enemy, and everything else that gets thrown around that's right and not right. In particular, I want to address what the Fed did during COVID with monetary policy and what the government did with fiscal policy and what they were really addressing. Because those who are new to the service may or may not have heard of slow growth forever. But the reality is that that is where we are, and we are trying to bust out of it, and it will probably be futile without periods of monetary easing. There's also going to be periods of tightening, which we just went through and are probably near the end of, to push the dollar back up. Now, in 2012 and 2013, when everybody was chanting, oh, dollar collapse, I said they were wrong. This was the same time that I said that gold was going to crash. And you should have seen the commentary on my MarketWatch articles. I was stupid. I was a communist. I was a libtard before there were libtards. I was everything there was in the world, pretty much all negative. What happened in 2013, of course, gold crashed from 1900 and got all the way back down to under 1,000 for a minute, 50% decline roughly. And the dollar against other currencies for the last decade has done nothing but move up in fits and bursts. Last week, I told you that I think the dollar is in for a softening period. Everybody jumped on that trade right away. That's what's going on right now in the stock market, is everybody thinks that the dollar is going to just fall off a cliff. They're wrong again, just like they've been wrong for the last 40 years. So let's start with the dollar, because ultimately the Federal Reserve's job is to move the dollar up and down, depending on how we're making our money as a nation at the time. Now, when I say as a nation, that means that you better pay attention to what the Fed and the government are doing, because they move global markets the same way that the Saudi Arabians in the past have been able to move oil markets. Saudi Arabia's power is diminishing much faster than ours. And in fact, a lot of the money that we've paid to Saudi Arabia over the last 5 decades is going to come back to America because they need somewhere to invest it, and they need a lot of favors. And of all the countries on the planet that you'd want to ask favors from, we're the most straightforward. We just want to get paid for it. China wants to own your soul. Russia wants to take you straight to hell. Europe doesn't have the power, neither does Japan. India probably will someday, as long as they stay on the democratic side. When I say democratic, I mean democracy. Maybe China someday if they get over their communism. Maybe Russia someday if they can chew up Putin and the right wing and spit them out and bring back Gorbachev's vision, which I think actually will happen. I just don't know when. But the way that the dollar moves is your indicator on how to invest. And for those of you who hate the Fed, think the Fed is evil, I just ask you, in the last 80 years, has the standard of living in this country gone dramatically up, sideways, or down? It's not a very hard question to answer. Standard of living in America has been on a constant path upward. Even with recessions, we've come out of every one better. Every single one. Even the Great Recession, we ended up coming out way better off for it. So when people want to talk about the Fed this, the Fed that, because it's something they read on Zero Hedge or New York Post or saw on Fox News, I will just tell you, I've been in that game. Remember, I worked for a Rupert Murdoch-owned company, MarketWatch and the Wall Street Journal at the time, and I've had some very good insights into Fox, people that I met that work there. Breitbart recruited me to be their climate change denier-in-chief. I turned down a very lucrative 6-figure package that could have turned into 7 figures because I wouldn't say that climate change was fake. Anybody who still believes climate change is fake, you don't understand the science, and you're buying into straw man arguments from people who were bought and paid for. And again, I say that as a guy who was on interview number 4 Steve Bannon came on the line and point blank asked me, can you say this and this and this? I said, I'll go where the evidence takes me, and a few other things. Less than 2 hours later, the offer that they had made prior to the fourth interview got rescinded. So if I tell you something is something, it probably is. I'd say over 90% of the time when I take a stand, and I don't always take a stand, I'm right. When it comes to the macro and how the money works in this country, who is telling the truth and who is lying. It all goes back to Grandpa Kirk. If you want to know how things really work in this country, follow the money. And for those of you who are new, that is a phrase that you should go back to over and over and over again. It is why in our 4-step process, the second step is look at where the federal government is sending money, where governments in the world are sending money, what industries are they supporting, what industries are they not supporting, and what are the central banks doing? In particular, the Federal Reserve, because they're the sheriff and everybody else is a deputy. So what is the Federal Reserve's number one job? Teresa, no fair you answering. Does anybody else know the Federal Reserve's number one job? I've said it before. That's right. It's not only protect the dollar, but it's to move the dollar. So let me give you some examples. When the Federal Reserve wanted to see valuation come out of the market, what did they do just a couple of years ago? They told you and gave you 4 months notice, 5 months maybe, I can't remember exactly, that they were going to raise interest rates and that they were going to raise interest rates quick, that they were going to embark on $1 trillion a year quantitative tightening for the Fed's balance sheet. And at the end of 2021, when I said there'd be a bear market in 2022, people once again called me stupid and perma-bear, idiot, libtard comes up all the time. I don't even know why. And that the stock market couldn't correct. For this reason, that reason, the other reason, and a bunch of reasons that just don't make any motherfucking sense. I apologize. I have tried to change one word to a different word in my vocabulary. I'm supposed to say mother sucking. At least Elon Musk would like that. What I'm telling you now, and what I wrote about last week, last week, is that there's 2 directions this market could take, but they probably both end up in the same place. Up then down or down then up, or wiggle into the same place, I guess would be the third way. So one of the articles had the section shape of the markets. So right now, everybody jumped on the weaker dollar trade, and the market is rallying. Large caps in particular, but it's been spreading out. So we are rapidly getting to a point, and Shooter showed this over in the rare investing group chat feed, that 50 or 60 or 70 large cap stocks hit 50-day highs, and a lot more are closing in. I asked him what website he used for that. I think I recognize it, but it's good data to have. I just usually look at breadth, but the market's gains are spreading out. And what I think is that the shape of things is that there will still be a correction. Why? Well, first of all, I don't think the Fed's going to be completely easy on things. I still think that rates will be higher for longer, and that usually means multiple quarters. I don't think anything means multiple years anymore unless it's a secular trend. And they can still talk pretty tough. They could even surprise us with a 0.5 point increase. What would that do to the markets? But we'll see. We'll see what the Fed does. They keep talking tough. People keep ignoring them. That just sounds like a bad idea to me. And then in October, people have to start making student loan payments again. Granted, they may be lower than they were because President Biden by then is going to pass a rule that only requires you to pay back 5% maximum against your income. So a person making the average U.S. income of about $60,000 a year, it's a little more in some places, a little less in others, only have to pay back $3,000 a year on their student loans. And if they still owe money after 20 years, it's absolved. But in the short term, it's a lot of money that's going to get sucked out of the spending side of the economy, and I think the investing side of the economy, because people quit investing before they quit spending. It's just the way that it is. So I don't know what shape the wiggle's going to take. I rely on Shooter for that. Right now, he says it's going to keep rallying for a little while. However, I'm starting to set trailing stops on a lot of my stocks, with the exception of the ones that are super value priced. Still buying the dips on Ford, still buying the dips on Ametis. Been piling into Spire Global this week. That's why I showed you that video on Spire Global before we went on air. and I think you should click the link and watch it later. There's a company trading at about even with their annual recurring revenues now. Was 77 million market cap against 103 million in annual recurring revenues. That doesn't make any sense at all, does it? There's no price to sales ratio there. Should be 3, 4, 5, 6, depending on the growth rate. Well, the growth rate's over 30% a year. And you heard the CEO talk about, we have 800 customers, and there's potentially 200,000 that can use our services. And I actually think that's light. Just think about all the big companies on the planet, then think about all the little ones. We all use subscription-based services. If you have a small logistics company in Milwaukee, Wisconsin, that's really regional with a couple of over-the-road trucks, but you want to grow, sure would be helpful to have satellite data, especially if you can get it for cheap. Since these guys have the largest radio frequency satellite network out there already deployed, just need to do some replacements here and there, and that they're building regional satellite networks for people who want to, say, monitor the area around Australia or parts of Africa, or they want to monitor space junk, which SpaceX is taking up for them in a couple of months, or weather here, or logistics there, ships in particular. They monitor virtually every ship, airplane, and weather system on the planet. If they miss one, it's rare. And they're a big deal. And I think as they grow and they get to about 2 billion or 3 billion in market cap, maybe it happens before then. Aspire Global is a clear merger and acquisitions candidate. And I think that they could just outright buy Satellogic, or they're already in bed with Black Sky sharing data. Maybe ultimately those two merge. I don't think it's for a few years because I think they're both undervalued dramatically. Satellogic I don't like because they're not selling anything. I just think that Planet and Black Sky and Maxar are kicking their ass, and that's the way it is. Even though Satellogic probably has the best technology. So I do think they get bought, but I think it's kind of like a we'll save your company and you can keep a job type of takeover. I think Satellogic gets bought for less than it trades for today. That's why I kicked it off the plug and play. All right, enough about satellite stocks. I dropped stuff in there for you because I don't really want to put it in the title and draw a lot of attention. I do know that there are some very rich people, just like with the Metis, sniffing around Spire Global suddenly because I told them about it. After their earnings, by the way, I will be interviewing their executives. In particular, I'm hoping to talk to the new CFO if they announce it by then. The current CFO is leaving, kind of being pushed out the door. And by the way, the reverse split, which is what he resorted to, may not happen. It's authorized, but it might not happen. The stock gets over $1, not so sure that it occurs. We'll see. And if they do, it might not be too dramatic. It might be like a 1 for 4, 1 for 5 sort of thing. In which case, who cares? All right. So let's go way back. Go back to the start of the show. Go back to the start of COVID. I wrote an article on March 23rd, 3 days before the bottom in the stock market. So the Fed says helicopter money is here. And one of the questions that people ask, and it's a good question, is why did they print so much? A couple reasons. First off, at the time, COVID was presenting as potentially disease X. What is disease X? Well, it's the disease that scientists have been worried about and watching for over 20 years now. It's the disease that kills frequently and spreads easily. That's what they're worried about. Right? That's why all the zombie apocalypse shows are on TV. There hasn't been a disease that spread easily and killed many in a century. And given a lot of the things that we've unleashed, say in labs in Wuhan or elsewhere, because of the research that we do on weapons and everything else, genetics in general, pathogens that can be turned into weapons, we don't even know what's out there anymore. And bats, we got a whole DC comic series on bats, right? They can be a plague. As a mammal, they carry all sorts of diseases that are really bad for the rest of the mammals. We happen to be a mammal. Science says so. So if COVID had been disease X, the economy may have stayed on its back for a lot longer. At the time, we didn't know. Remember, we have a subscriber who used to be the number 2 guy in the Mexican health department. And he said that if we had closed everything down for 12 weeks, we would have wiped it out. We would have made it like it is now in just 12 weeks. But we had demagogue politicians who made it a freedom issue and used it for political purposes, and we reopened after 6 weeks. The result was we didn't slow it down. We didn't flatten the curve, which is all we needed to do, because frankly, we were a bunch of bitches. We couldn't hang out at home for 6 more weeks because you had the far right wing being bitches. Hey, I grew up in a very urban neighborhood, and that's what we called those people back in the 80s. We also invented a gesture. Put your hands in front of you and then slap them down to your belt and flick it back up. We invented that too. So here we are. Over 1 million people in this country died from complications of COVID. And granted, like 80% of them had comorbidities. I get it. But if I told everybody, hey, you have a comorbidity such as being overweight and you're fair game to, die, would you have a problem with that? Because that's basically what they did. So the reason they printed so much money is because they thought they were going to be closed for 12 weeks. That's what they thought. Then you had stupid people in certain states start walking around and violating not only the mask orders, but basically, breathing up each other's nose just to make a point. Yeah, a lot of them died. It's probably why a lot of Republican politicians are in trouble. A lot of their voters died. That's actually proven, is that about 2/3 of the people who died appear, from all records and studies, to have been Republican voters. And remember, I say this as a guy who worked for John McCain for a hot minute. I'm pretty centrist. I lean libertarian, liberal on social issues. But you heard me talk about San Francisco, Las Vegas, and how their politicians suck to not deal with the safety and drug problems. So the Fed printed a lot of money. One, because they didn't know what they were dealing with in COVID. And two, if it ended up being extra, that was okay. Why? Well, what's a very famous phrase? Never let a good crisis go to waste. So if they printed too much money, all that did is pull forward the bailouts that we're going to need when the baby boomers are all retired in 6 years and they're all on Medicare. They're all on Social Security. So when the baby boomers are all retired and using the social welfare systems, and really Social Security is just a low yield pension. I mean, they take money from us for that. I don't even know if we get a positive rate of return, but theoretically it's a pension that doesn't earn anything or earns very, very little. So if they really paid us the 20-year treasury rate, and right, if they had really done that lockbox, which Al Gore talked about during the 1990s, and he was absolutely right about that, nobody in America would worry about retirement because we'd all have hundreds of thousands of dollars at a minimum in our Social Security accounts, probably millions. So they printed a lot of that money, and the federal government did the bailouts that they did, PPP loan in particular, which got abused by a lot of people that should go to jail. But we won't do it because if we expose it too much, then the government can't do it next time when they need to. So we let certain people steal. The connected and those who are really good at stealing. But all that money that's been helping push the stock market up and has helped us jumpstart the transition to a clean energy future was just pulled forward. That's all it was. COVID was used as a way to say, let's get all this money into the economy for all these purposes. If we have to clean it up later, we'll clean it up later. And that's what quantitative tightening is. Is as we profit on that money, and we are, they just re-soak it up. That's what the helicopter money was for. End of 2020, I said that the pandemic, debt, and the end of falling interest rates we talked about. We knew that there was a vaccine coming, right? It just started to be given to everybody at the end of 2020 and start of 2021. We knew by then that there's a lot of money in the system and it had to be soaked up. And we were at the end of what was essentially a 40-year bull market in treasuries because interest rates chopped their way down to nothing, from around 20% in 1981 and 2 to around 0 in 2020. Shooter points out that about a quarter of all the treasury sales end up in the stock market. I don't know if that's a little bit low or a little bit high, but it sounds about right to me. And that's why they're soaking things up through quantitative tightening. Now, the rise in interest rates in the last year and a half, even though the Fed warned everybody, somewhere I have that, there you go. You had regional bank presidents and all sorts of small bank presidents not adjust their balance sheets. And that's why we've had a lot of banks under stress. But the reality is that because all the banks were subject to the rules for keeping enough in reserves, we haven't seen that many go under. The ones that did go under had special circumstances, ties to crypto, ties to no principal payment loans, things like that. And the Fed had to bail, the Federal Reserve and FDIC had to create some ways to bail them out. And the way they bailed them out is they let all those stocks go to zero. The bondholders took major haircuts, over 80% in most cases. And only the people with deposits at the bank got saved, which is, as I wrote in another article somewhere, exactly what you all asked for in 2008 and 9. Save the people, not the banks. Well, they heard you, because that's what they did this time. First Republic is now owned by JP Morgan. Everybody who was invested in First Republic got wiped out. SVB, Sovereign, they got wiped out. If you had money in the bank, you're okay. But if you own their stock or their bonds, you lost, got destroyed. They did rakebacks, and they're going to continue to do rakebacks on the money that those executives pulled out in bonuses. There's a few cases where bank executives sold after they were warned about their banks. They might go to jail. I hope they go to jail. First Republic, they were warned months and months ahead of time. You need to fix this. And for a couple of months, we knew that they were trying to raise capital. We talked about it. So it's not like it was unknown the First Republic was in trouble. But during those few months, the executives sold stock. You really ought to be writing your Congress people and saying, hey, these bank executives that knew their banks were in trouble, but they sold stock. Yeah, I don't think clawbacks are enough. They really need to spend some time in a state-run, no-leaving country club, minimum security prison. They should. They should have to disappear from their families for 2, 3, 4 years, maybe longer. I don't know. I don't know how serious it was what they did. I just know they sold stock on insider information. What would they do to me on that? They should get that. Whatever they would do to Kirk is what those bank executives should get. Tell your congressman. Don't mention my name, though. All right. So the Fed warned you at the end of 2021 that they were going to raise interest rates and embark on quantitative tightening. And I told you we're going to get a big stock market correction. And we did. But then we had the bank deals, push the money back into the system, and now they're trying to suck it out again. And I believe, what do I believe? I believe that we are at the peak here, and apparently I didn't put it up here, of interest rates. We're very close to the top in interest rates, which is why we bought TLT a little while ago. But that quantitative tightening is going to stick around. And probably a quarter after they should do it, maybe 2 quarters after they should do it, they'll make quantitative tightening variable. Not just a schedule, but variable. What Powell should say, and remember our theory, things that should happen usually do eventually. What Powell should say, maybe by the end of the year, is that inflation is under control and that we are going to make our decisions on quantitative tightening meeting to meeting, reducing it when we can, increasing it when we need to. Why would making quantitative tightening variable be an interesting policy? It means that they could use that giant balance sheet to do whatever they want. And since we all know now that their number one job is to move the dollar around, wouldn't that make it easier? You have this gigantic balance sheet, but still around $7 trillion. And you can move it around $1 trillion here, $1 trillion there, right? Because $1 trillion here, $1 trillion there, eventually it's real money. Somebody asked me in the chat over at Margin of Safety, I hope you're on. Well, so are you saying that the Federal Reserve isn't really primarily interested in employment and inflation? Yes, that's what I'm saying, and I've been saying it a very long time, literally since I was in college. If you study economics and you study the Federal Reserve, you take a class called Money and Banking, you very quickly realize that the Fed and the dollar are the same, and everything else is just part of the way that they move things around. What is a bigger boogeyman, inflation or deflation? If you say inflation, you're wrong. You've been wrong a very long time. Inflation has been coming down for 40 years, and deflation became the big boogeyman during the financial crisis. Why? Because the boomers were leaving their peak earning years, and there was nobody to replace them. Now the boomers are going on to Medicare and Social Security. The millennials are there to replace them, and we have a lot of capital that we pushed into the system ahead of time to help us get a lead, or in some cases catch up, on critical industries. Everything fourth industrial revolution, we've taken the lead on almost all of it. Clean energy, decarbonization in general, carbon capture, batteries. We either are in the lead or catching up on all of it. I am very glad that Elon Musk is in the psychedelics because he has figured a lot of neat things out as he bounces around from baby mama to baby mama. But suddenly, rare earth metals, not so big of a deal. They're important, especially for the military. And we have Mount Pleasant for that, which is originally where MP Materials came from. Molycorp owned, I think it's called Mount Pleasant. That might be the mountain in the 100, that horrible series that I watched all the way through during COVID. So we're solving all these problems technologically. One of the ones I've told you to watch out for is how do we create healthcare deflation? Because between energy and healthcare, those have been the 1 and 2 causes of inflation for 40 years since Ronald Reagan, and actually energy before that. What Ronald Reagan did to the healthcare system in this country and his compatriots is what directly led to healthcare inflation. I'm not going to go into an entire dissertation on it, but I could, because that's what I wrote about in college. And I've watched for 3 decades now to see if I was right. Clearly I was. Is that more privatization in the healthcare system ended up not being good. Why? Because monopoly has to do with pricing pressure and substitution. There is no viable substitute for healthcare. So in essence, even though you have multiple providers, it ends up being monopoly pricing pressure because there are no substitutes, and they essentially act in collusion. They may not call each other on the phone and say, hey, how do we make the healthcare spending pie bigger? But by action, that's what they do. So when we say we don't want to own United Healthcare because it's so big, but turn around and say, well, we like this other tech company that's essentially in the same field minus the insurance, people are like, well, why wouldn't you just buy United Healthcare? Because United Healthcare is super big and super expensive, and they're going to suffer shrinkage as the tech companies come in with AI and data, and they push the cost of healthcare down. And it looks like we're at the peak in healthcare costs. It does right now. Next 2-3 years for sure. That by the time the baby boomers are all on Medicare, I will say something else controversial. I think that we're seeing healthcare deflation by the end of the decade. And that's going to be one of the drivers for this other controversial thing that I've said. That in the 2030s, with the millennials in their peak earning years and baby boomers starting to die, and healthcare deflation occurring, and energy deflation occurring, the United States is going to run a budget surplus in the 2030s, at least a balanced budget. What happens to the dollar as that becomes apparent to people? Not when it happens, but when it becomes apparent that it's going to happen, which won't be for several years. It means the dollar goes through another major bull market. So in the next few years, the dollar may in fact soften. It's not going to fall on a cliff, though, fall down a cliff. It's just going to drift down, which means that TLT will be profitable for a while. It means that emerging markets probably do better. And that's where we're going to end today on those 2 topics. But then the dollar gets stronger, because by then it'll also be apparent that the BRICS currency doesn't mean dick. It's just a way for 40 countries to trade with China without China screwing them over. And someday they'll tell China to go pound sand. Nobody likes Russia right now. I mean, everybody's waiting for Putin to die. Everybody. One of his buddies was trying to get him out. I think 2 or 3 of his buddies have been trying to get him out. Anybody watch President Biden this morning? He made a joke about Putin needing to be careful about what he ate. Look, I know that Joe Biden's older than the hills. However, if you're not paying attention and you can get over any ideology, this has been one of the most successful presidencies in a very, very long time. Probably going back to Clinton. The economy's getting better, full employment, NATO is strong. All he has to do is sidestep a crazy Putin. Remember the movie The Hunt for Red October? The crazy Ivan? We have to make sure that there's no crazy Putins, that he doesn't do something nuclear. And I don't think he will, because some of his adversaries are generals in the Russian military. And some of them were friends of Mikhail Gorbachev. There is another era coming for Russia. I don't know when it is. Jim Rogers talks about it. Been talking about it for 2 decades. And he's right. Putin has just been a speed bump in Russia turning into a world leader that has some respect. It's going to take a couple generations for it to happen, though, because Putin screwed things up so badly, or zucked them up. And it'll change as the rich lose money in particular. Right? When the rich lose money, they get angry. And when people get hungry and cold, they get angry. And that's why our policy with China for 50 years has been, don't let them get, angry and cold and hungry. Hungry, cold turns into anger, right? That's what Star Wars is all about. Yoda had something to say about that. So near the end of the decade, the dollar will start to get stronger again. It'll be because the BRICS currency doesn't matter. Bitcoin will have started to play out. between now and then, Bitcoin will go up a lot in price because it'll end up being the international currency hedge. I just heard somebody talk about that on Bitcoin. Excuse me. I just heard somebody talk about that on Bloomberg. So all the things I've told you about Bitcoin is an international currency hedge. It's what it's going to be used for. You'll never order your pizza with it. But if you have to manage a balance of trade, or you're a bad guy, or you're an enemy of the United States, or you're just somebody rich enough that you want to have some, in case you have to flee the country, that's what it's going to be. And that demand alone is enough to push it into low to middle six figures. I don't know about this $2 million price that Kathy Wood has, but she's a good big picture person, but man, is she bad on the details and the trading. So let's mention ARKW. That's really on a big rally. In the accounts that own it for me, I just put a 5% trailing stop. I'm not trying to predict when it peaks, but it will. And when it comes down, it'll come down hard in steps. Your job is to try to get off on the first step down. So I have a 5% trailing stop on ARKW, which isn't in a lot of accounts. It looks like a dozen. And when that comes down, that'll be my signal to take a look at Bitcoin, which is tied to that fund through some of the holdings and a position in GBTC. And I'm going to try to figure out a way to own more Bitcoin. I think the best way is just take some cash out of the bank. If you don't want to do all the wallet stuff, just through your brokerage account on the side, right? Because everybody offers crypto now. Schwab, I think, does. I know Fidelity and Interactive Brokers do. Just take long-term positions slowly, incrementally, wide price points, small bites over time. Build a Bitcoin position that can be your international currency hedge. Your idea isn't that it's there for investment. Your idea is that it's there for security and diversification against part of your bank assets, not your investment assets. I've been saying that same thing since actually about this time 2020, right? I told everybody to get back into Bitcoin in July and August of 2020. And then I said sell it at the end of 2021. And then we bought it again at the end of 2022. All right. All these articles are important ones to pay attention to. So all you have to do is go to my profile, click profile, and then just scroll down for about 5 minutes. Then put in the words that you want to search for macro dashes articles, 13 of them, Fed, 10 of them. Got some of the trades wrong for sure, but the theory has all been spot on. I've been right about this stuff now for decades. So how do we apply it to ETFs? Well, so I'm offering 401k plans now. And the Global Trends ETF article that I'm writing, there you go. So new here. There you go. No. Oh, here it is. They just changed the portal. So all of these are on the Global Trends ETF list on the VSL. And I'm changing the way that I lay that out to just some of the buys and sells. And then there will be a model portfolio based on these broader ideas. And I'll actually show it to you as a model portfolio month to month. So this plan has money transferring in 2.5 weeks. And I had it set up a month ago, which is 20% cash. I have started adding to the 20-year treasury. So this 20-year treasury, depending on what the price is no, you cannot link to this. The 20-year treasury, when the money hits this plan, I'll have to see what the price is. But you should be buying the 20-year treasury, TLT, now, buying all the dips. Because if the interest rate goes to 3% from 4% to 20-year bond, you're going to make about 20%. There's almost no risk in TLT right now. I mean, short term, yeah, a couple bucks in either direction. But I'd be buying it. I mean, my orders are at 99, and I don't know if I have to move those up. I think maybe the Fed gives me one more chance to buy it under 100. We'll see. The Fed would have to be extremely hawkish, push it under that, 99, 100 range. And I think they're going to be hawkish, but, they're not trying to blow up the system either. So TLT was one of them. And we're going to be adding to emerging markets sometime soon, probably just start scaling in slow, almost immediately. I'm going to look at FS Insights and a couple other services I use, try to figure out which 2 or 3 emerging markets funds, as well as that international dividend fund that we're going to use. Because as the dollar comes down, that's going to be very good for emerging markets. And the international community has a huge vested interest in making sure that those economies go clean versus heading to the coal side. I believe that the opposition to coal has pretty much mounted. I think the signal was in Australia. Coal is about to get crushed again, about the same time that oil starts to get crushed, right? Our target has always been what year? 2026, for the fossil fuel prices to plunge, at least for coal and oil. That companies like Ametis, there's dozens of them popping up, with the biofuels, you're going to start to see virtually all agricultural waste turned into fuel. So as that occurs, and Ametis is on pace for 2026 with everything running, and other companies are too. BP just jumped into the game. You may have seen that Shell is trying to sell off their green energy. And idiots will think that's bearish, or those that are just ignorant of what's really going on. The fossil fuel companies that aren't going to be getting huge tax breaks for carbon capture are spinning off their clean energy. Why? They don't want it dragged down. They're not getting a bump from the multiple, so they're going to spin it out at cheap, be big inside owners. Probably some of the executives move over, and they get in on the big new secular trend up, and they get out simultaneously of the big secular trend down. So while natural gas has a place, even more of that is going to be getting replaced in the 2030s. And all these things that we talked about, maybe it takes till 2040 or 2050. All you gotta do is connect the dots on the curves. It's going to be faster than that. By 2030, there won't need to be a law that says 2/3 of the cars sold should be EV, or at least not ICE vehicles. Why? Because it'll already have happened. It'll already have happened. Shooter points out, could just sell $99 puts, $100 puts. So I think I'll probably send out an alert, because I think I might do that right after the call. I think I'm probably going to sell $100 cash secured puts on TLT. Well, I set a limit order when I can collect income, right? I'll see what the premiums are. A lot of the premiums are very low right now on puts. That tells me that we should be looking at potentially making a volatility trade and buying some puts on the S&P 500. So shooter, that is your job. Figure out where our entries are for a spike in volatility, or at least a rise in volatility, something we can make money on volatility. It's got to be an easy trade. I don't do hard ones anymore. Getting old. Don't like hard ones. But if we can find an easy trade on volatility and some cheap insurance on the S&P 500, I think those are both probably pretty good moves. All right. So have a great day. Have a great weekend. I've got a birthday party and a graduation party to go to. So good thing I was in Vegas with $100 bills. I got $100 bills to stick in envelopes. And yeah, enjoy the rest of summer. We got 8 weeks left. Plus, I would guess it stretches a little bit like it's been doing. Take care.